Hey guys, Akil here. Welcome back to a video episode of the Trading Coach Podcast. So head over to Spotify or YouTube to check out the visual version of this. Of course, you can listen to the audio version on your favorite podcasting app. Today, we're going to talk about the common question of, is the trading grass greener on the other side? Now, I know we have a massive international following. Thank you, by the way. And a lot of the terms and words that I use here in the US mean other things overseas, like licking your chops. Apparently, that's not a good thing in England. But the term, the grass is greener on the other side, essentially refers to, well, we're going to refer it to system hopping here in the trading world. Meaning that you are trading a certain system and you're having thoughts about another system over there saying, hey, this one's not currently working the way I wanted it to, or I'm dealing with some type of fear or struggle. I'll just go to the thing over there and everything will be better. So you think. And the question came from a conversation we were having on the Tier 1 trading platform the other day with one of the traders that I'm working with. By the way, if you are interested in trading education, lots of educational resources, live sessions, a great community, software courses, all the fun stuff. Head over to www.tier1trading.com and check it out. I recommend starting with the trial membership. That way you can kind of feel us out before making any type of financial commitment. There's no kind of sleazy auto bill or anything like that. You're just kicked out once your trial membership is up. But the trader wrote me this. He said, Akil, I need to ask you something. I'm currently on a hot streak for the bat pattern, right? This is an advanced pattern formation, something we spoke about in the podcast episode. Actually, I showed you an example of this in the podcast episode about the aggressive C, so the failing strategy podcast. And I already have 6 winning trades in a row. Yes, which is better than what I had in my back testing, right? So this trader's live results are outperforming their back testing results, which is a good thing, right? But this is also a bad thing because outperformance also brings fear of what's on the other side, right? I think of it like a roller coaster, right? Where you're clicking up, click, 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 click. You're going up, you're all excited, you're making money. But you know, once you hit kind of the apex of that roller coaster, boom, you got to go down a little bit. By the way that physics work, you don't go down as much as you went up, and that's how your equity curve should look as well. But I understand the fear of what goes up must come down, and although this trader is on a winning streak, in this trader's head, they're saying, I know losses are coming, I know losses are coming, I know losses are coming. Now, let's pause right here because this isn't necessarily a bad thing, right? In fact, I would say it's much better than the alternative. What I see that happens to a lot of traders, ones that don't have realistic expectations, ones that haven't back tested, that have no idea what their strategy's edge is, if they even have an edge, right? They're kind of just randomly doing stuff, is that when they get on hot streaks, instead of it being because of the strategy, it's because of them. And all of a sudden, they got the magic touch. I'm going to touch this, it's going to turn to gold. I'm going to touch that, it's going to turn to gold, right? And what they do is they get overconfident. So instead of being worried about losses coming, which is a natural self-risk management way to think about it, I think the correct way, they get overconfident, and before they know it, they think they can't lose. So they start trading more. They start trading with bigger size. And when that eventual, there we go, words, right? When that eventual dip does come, that dip is taken with an inflated risk. It comes off trades that don't meet their requirements, don't have any edge, and that's how accounts go boom, right? So I'm not mad at this trader for thinking this way, right? We should mentally prepare ourselves for losses. That way we can handle them better when they do come. But the issue that this trader is facing is because this winning streak is outside of the box of normality, right? We had a conversation this morning in the live room about Bollinger Bands and Keltner channels. So we're talking about standard deviation and existing within ranges. So this kind of works perfect into that. Half you guys have no idea what I'm talking about because you're not in the live room. But for you special live room members, this is a perfect example of that as well. Because this trader is performing better than their expectations, now the thoughts had shifted to, okay, should I expect a drawdown that's worse than my expectations? And the honest answer is we don't know, right? All that we can acquire from our backtesting results are what is the norm, right? We have extremes of biggest winning streaks, biggest losing streaks, biggest profitable times, biggest max drawdown times. But in reality, right, the market can do whatever it wants. These things are always changing, right? Another shout out to a podcast we did was about the climate control and how cities prepare themselves based on kind of historical data of how much does it rain, when it floods, how much water do we get, what is the normal heat, what is the normal cold, what is the normal traffic patterns, and they develop themselves to handle those norms. But as things change, those norms increase, those norms decrease, and you always have to make those adjustments. So although our backtesting data provides us with the best kind of predictive outlook, yes, things are going to happen outside of those extremes. You're going to have hot streaks that are better. You're going to have cold streaks that are worse. And that's why we have to prepare for that. But although we're preparing for that, we shouldn't psych ourselves out and go crazy, right? We just need to kind of stick to the plan and do what we're supposed to do. And if we range a little bit outside of that norm, guess what? Your win's already made up for it. So it's not that big of a problem. Now, this goes to the second part of the question. Akil, I also would like some advice on points of targets. I have a rule that my initial risk reward cannot be less than 1-to-1 or I can't take the trade. There's some more details in here, but I won't bore you with it. But when I adjust my risk within the trade while the trade is in progress, and this is kind of an active trade management thing specifically with patterns, I end up often having a risk reward that is less than 1-to-1. So it's a negative risk. You potentially can lose more than your make. Now, going back to that question about drawdowns, if I'm in a position where I can lose more than I can make, and I'm in a position where I may experience a bigger drawdown than normal, how the heck is my system going to be profitable, right? I'm paraphrasing right here, but I can imagine the freak out that the trader is having. And it's a good question, and we'll attack it from two ways, right? One, first and foremost, remember that the way you are currently trading, so adjusting your risk reward so that it ends up negative in real time, is the same way you tested it in your back testing, right? So although all these thoughts are swirling around your head, you've already planned and prepared for this scenario. You've already tested this scenario. You've already experienced this scenario. And as you've taken your strategy through all of those tests, it's proven that even when I make these adjustments, even when I have these win streaks, even when I have these losing streaks, my edge is still positive. So there's no need to freak out. We've already proven that even with these adjustments, you still have a profitable trading strategy. And if you didn't have a profitable trading strategy, it never would have made it past the back testing phase. So that's number one. Trust the work you did, right? You've already planned for this and passed the test. So just follow your plan and do what you're supposed to do. However, if you do have a problem, let's say like a psychological issue, a comfort level problem with the negative risk reward, then what you would want to do is you want to make those adjustments, right? You can do things where, hey, maybe you scratch the whole active trade management things where you don't reduce your target based on price movement and you just keep it the same way every single time. Maybe you choose a bigger initial profit target. That way, if you do have to make those adjustments, even after making that adjustment, it still keeps you in that 1-to-1 zone, which is where you're comfortable with, right? There's nothing wrong with doing that too. And right now, I advise that you guys do and try all of these different options out during the back testing phase. The key is you can't just all of a sudden go and make this adjustment because you're scared or you're fearful. You got to go back through all of your testing and make sure that if I make this adjustment, I still have a profitable strategy. Something that a lot of traders like to do is they like to make adjustments that they think will give them positive results, but they don't understand that there's always kind of a give and a take. It's one of those like kid game things where you push the little thing in the hole and it comes out the other way, right? Whenever you adjust one thing, right, something else is moving with that. So it could be a difference between, hey, I'm going to make my targets shorter, right? Smaller, closer to my entry. And what that's going to do is, hey, it's going to give you less profit on each trade. However, it's going to give you a bigger win percentage, vice versa. If I'm going to stretch my profits out and shoot for big, nasty home run targets, I'm going to have these massive wins. I'm going to have an amazing risk reward on average, but my win percentage is going to get hurt because of that. So whatever you end up doing, just make sure you test it to ensure that it still makes you profit. So the next issue that this led the trader to was the idea of negative risk reward. I don't like that. And then bouncing on to talking about, well, I see these other traders out there always talking about 4-to-1, 5-to-1, 3-to-1 risk rewards. And I would feel a lot better if I had that. Because with the negative risk reward, I can win blank amount of trades in a row, but if I lose this amount, then all my profit is sucked dry. And again, at this point, again, taking this back to like the live conversation, this is just like the spiral of thoughts that our trader is going through, right? We've all been there, right? Where you think one thing and it leads to another thing, and then we're trying to find solutions and it just spirals out of control. And you need someone to be like, hey, RELAX. Relax. And thankfully, that's what I'm here for. This is what I do for traders on a regular basis, either live when I'm working with them or hopefully in podcast episodes like this, where if you're going through the same thing, you can listen to this and be like, okay, feels like he's talking to me. So this goes into the grass is greener on the other side, where the trader's saying, okay, I don't like this negative risk reward. I'm fearful of this big drawdown coming, and big drawdown plus negative risk reward means my profits that I had from this massive win streak are all going to be sucked away and I'm going to be in the negative. Again, not necessarily true, but these are the thoughts that are going through our head. And I spoke to the trader about, well, yes, it does sound good when you have a 3-to-1 risk reward, a 4-to-1 risk reward, a 5-to-1 risk reward, especially if you're winning. But going back to the give and the take, there is something you have to be aware of with that as well. As you have those bigger risk profiles, you're more likely, or you're most likely, I should say, going to have to deal with a lower strike rate, right? That brings its own problems, right? So you've solved the risk reward problem of like, I feel uncomfortable with negative risk. Now I have a positive risk. Now I'm happy here. But all of a sudden you went from a 70% trader to a 50% trader or a 55% trader. So now the question is, can you deal with a lower win percentage? Can you deal with taking more losses? We had a great conversation in the live room this morning about that. I hope I have time before I leave for my trip to put it into podcast form and share it with you. But it was the story of a very profitable strategy that had one problem. And that one problem was it only had a 30% hit rate, and psychologically that would destroy a lot of people, making it not untradeable, but making it very difficult to consistently trade without breakdown or without error. So I told the trader, you're just trading one problem for another. Don't just jump over to another system and assume like, okay, all my problems are fixed. You may have fixed one problem and patched one hole, but then there's another thing that you have to deal with. And before you know it, we're going to be in the same situation, just having a conversation about how can I win more? How can I do this, right? So you got to think about that when you're doing the system hopping thing. It's many people system hop because they're looking, they identify a problem, and they are looking for a solution, a quick fix solution to that problem. And the reality of trading is that whatever you do, there's no perfect strategy. There's no perfect strategy that wins 100% of the time and gives you a 1,001 risk reward. There are always going to be flaws, right? It's the same thing with life. It's the same thing with relationships, right? I've been married for a very long time and my wife is perfect, right? But some of you guys may say that your wife has some flaws. Again, my wife is perfect, just making that clear for the record once again. But you may notice flaws that your wife has that my wife doesn't, and you just have to deal with it. That is okay. That comes with the package. She or he is great at a million other things, and maybe they're poor at one thing, but you accept that. And acceptance is a big part that really isn't spoken about when it comes to problem solving, right? We can't find solutions to everything, right? We have to accept imperfection. And part of understanding imperfection and avoiding the system hopping trend that many traders do is recognizing the limitations of both yourself and recognizing the limitations of your strategy. If you can't do that, you're going to bounce around from system to system to system to system, always dealing with some type of problem, only to run and bounce again. If you can, what you'll do is you'll be able to consistently trade your system. You'll become numb because you will have acceptance of like, hey, it does this really, really good, but this can be better. But over time, the profits that you make will give you enough confidence to really ignore the flaws of your system. Or you can add a secondary system that fills those gaps, and that way you kind of get the best of both worlds, just in different ways as you continue to grow your trading business. So I hope you enjoyed the episode. This is a little bit of a behind the curtain type of look at discussions that we're having on the platform. Again, if you're serious about becoming an independent, consistently profitable trader, I recommend you checking out our website, www.tier1trading.com. Get on, introduce yourself to the community. Trust me, they don't bite. They are going to be the biggest helping force in your trading journey, even more so than me, perhaps. They won't say that, but I'm saying that just because I believe in tribalization and all that fun stuff. But give it a try, and I hope to see you guys there. All right, until next time, plan your trade, trade your plan. Take care.